Welcome back to the What's Your More podcast. I'm your host, Quentin Harris, and I'm joined by a co-host guest today, Troy Silhan from Bank of England Mortgage. Thanks for joining me today.
Excited to be here. Thank you.
Yeah, man, we are back for episode 154. And so if you're seeing the headline on the podcast YouTube channel, the Hunterbrook case file, man, I'm excited to talk about this one today. I know Troy is. And if you're not aware, buckle up. This is a good one. This is an investigation based on a particular lender we're going to talk about that the investigation exposes a lot of things that people kind of thought have been going on, but really haven't been able to kind of dig into it. So disclaimer time, folks, for those that are listening. Our legal attorneys want us to say, hey, these are not our opinions. We are stating case facts only here. We are reading directly from the 18-page document, which will be on our YouTube channel at What's Your One More with the number one. If you want to find it and get all the charts, you want to hear the infamous voicemail, you want to see the infamous commercials, they'll all be on there. But again, this is not our opinion. This is going to be straight read from the case file here. So we are talking about the Hunterbrook case file today. So Hunterbrook is Hunterbrook Media, and they decided to release essentially an investigation against United Wholesale Mortgage. Now, also known as UWM in the mortgage industry. And before we get started, for our audience, let's talk about a little bit about mortgages for a second. Like, there's three ways to get a mortgage, Troy. And, traditionally speaking, what's the most traditional way to get a mortgage, right?
A lot of people would walk into their bank.
Right, where you make a deposit, where you do your business, you walk in. Might not be the best, friendliest way to get it done, but that's the most traditional, right?
Absolutely.
Then there's something like a retail platform, maybe someone where the bank has a mortgage company to the side, kind of like Bank of England Mortgage, where you can walk in. People specifically focus on mortgages, and the loans go through the bank channel of the bank they represent.
Definitely,
right? It's one bank, one exclusive bank. That's where they do it. And then you've got independent mortgage brokers, right? And as you'll see, independent mortgage brokers, what's their value proposition?
The biggest thing is that they shop your mortgage. They're going to have 10, 12, 15 different lenders they can
up
take.
To 70, doesn't matter.
Yeah,
right?
and they're going to get the best deal for you as the consumer is what they're tabbed to do.
Yeah.
And for years, 20 years ago, that was kind of the case. But as we're seeing more recently, what they're saying and what they're doing are completely different things.
From a mortgage broker standpoint, full disclosure, I did it for 6 years. I understand how the concept works. And the reality is that you have multiple outlets. Let's think of these as like channels that you can shop the loan and do the shopping for the borrower, and you may be able to find a lower rate. That's not always the case, but that is the pitch, right? The best rate is always the pitch. Now, what I want to explain to our borrowers, the way that works is there's wholesale channels, such as United Wholesale. Some of you may be familiar with that. Some of you may not. Some of you may know Rocket, right? Rocket's another channel, right? Matter of fact, these are the two biggest channels on the broker side, right? And they have the lion's share of the market share, right? And so as my producer, Charlie, is either going to put in the background of this, it's definitely going to be on our YouTube page. You'll see from this graph that there's the big bank, right? The big bank funnels credit lines, if you may, to these channels. So United Wholesale has a big credit line with a big bank. Rocket has big credit lines with a big bank. And they use those credit lines to facilitate loans for the independent mortgage broker to lend to the consumer. And so that's kind of how they work. Whereas in a banking situation, the bank just lends its own money. In this case, these guys will get warehouse lines and do that. So the spreads, if you may, the margin, the profit on these loans, they're not real big, right? Because you're paying a float money to use them, someone else's money. So you have to do a lot of loans to make a lot of money. That's what I'm trying to get at. And these guys have done that. They've done a lot of loans. They've built a pretty big loyalist brand of brokers, if you may, to send them business, right?
Right.
And so both these companies, ironically, are in Detroit, Michigan, and they're like 30 miles from one another. So you've got Rocket and United are like 30 miles from one another. And these two owners,
oh, they don't like each other.
But they hate each other. Yeah. And not like would be an understatement. I mean, I can't even give you an example that represents the hatred between these two organizations. But what's interesting is that they both are jockeying to be number one. And for so long, Rocket was number one. I mean, Rocket was so number one that they were originally called Quicken Home Loans. Most people forget that. Right. They came up with an ingenious marketing campaign that was so good it overtook the company name.
Oh, in 2015, we went through that whole revamp and became a Rocket.
Yeah. They had to change the company name. And so think about this. So the owner, just a quick picture for our audience, the owner of Quicken/Rocket, Dan Gilbert, happens to own the Cleveland Cavaliers. He also owns fathead.com. So that's kind of funny later on story. And then you've got the owner of United Wholesale Mortgage is Matt Ishbia. And Matt Ishbia is a former player at Michigan State University under Tom Izzo, like in the early 2000s. He was he was on the team. And then you've got a love of basketball, right? And then you've got Dan Gilbert, who owns a team. And you got Matt Ishbia that's number 2 chasing number 1, right? And so when you're number 2 chasing number 1, you want to be number 1. You literally want to be number 1. It just happens the guy that's number 1 you hate.
Yes.
Like that's what fuels the storyline. That's why I'm sharing it with you. You just happen not to like that guy. And so it's interesting. So we kind of want to lay the backdrop for everyone in the audience.
And he went out and he bought himself a NBA team as well in the Phoenix Suns. So.
Yeah, down the road, ultimately the story leads to he got his own NBA team. Yeah. But how did he get there? How did that happen? So let's talk about this. So as an independent mortgage broker, you have the ability, again, setting the tone for the audience before we get in the investigation, you have the ability to say, I'm going to work with United. I'm going to work with Rocket. I'm going to work with Fairway Independent, Home Point. I can go on and on and on because we know these channels because we're in the business, right? You can work with these guys. Now, banks that aren't in those channels, Bank of America, they're not in that channel. Chase, they're not in that channel. These bigger banks aren't in these channels. These are other outlets that the consumer would never walk into to go get a loan. They're in those channels. Like a consumer could not walk up to the doors of UWM, United Wholesale Mortgage, knock on the door and say, hey, can I get a loan? Now, Rocket, on the other hand, and here's the knock, if you may, they have a retail channel, right? They have a call center. So they have outlets consumers could go to, right? Or they reach out to the consumer. So that was always Matt Ishbia's take, is that we will never do that. We will never do that. That was always his sales pitch. If you work with us, we will never have a division that you compete against.
Yeah, you're going to compete with yourself.
That's correct. You just compete with yourself, right? So now that you understand the backdrop, the ideology of a broker is that they're independent. Right? They work for themselves. They are independent. They don't have a boss. They are their own boss.
And their boss is the consumer.
Their boss is the consumer.
Deal for me, the home buyer.
Right. So all of this sets the backdrop to this investigation. So the premise of the investigation was 2 things. How did United Wholesale Mortgage become the nation's largest lender of mortgages? Meaning they've done more mortgages than anyone else in the United States over the course of the last 4 years. How did that happen? Number 2, why did that happen? So that's the course of the investigation. Now, the methodology in the investigation is this. The gentleman at Hunterbrook, which would be the authors of this and the investigators and the fraud examiners that they have, and I say fraud examiners not because anyone committed fraud, but that's their title, they went and they took all of the HMDA data, which is, for our audience, that is the data that is collected on every loan by the federal government, and that stands for the Home Mortgage Disclosure Act, HMDA. And it discloses closing cost, rates, terms, race, ethnicity, origin, you name it, it's all in there. It's HMDA data. And the purpose of that data is to make sure that no disparagement is taking place in lending, right, amongst lenders. Now, this group got their hands on that data, right? They went and got the HMDA data, and then they overlaid that HMDA data with all the state and local public information from the deeds and the tax and the offices, right? And as you and I know, Troy, what takes place in that is that you can see who the originator is, and they will tell you who they sent that loan to, because as a broker, you don't close the loan in your name, you close it in the channel's name. So if it closed with United Wholesale Mortgage, you see that. If it closed with Rocket, you see that, right? And so what they did is, by overlapping those two, they took people like Troy out, because Troy doesn't send loans to those places. He sends loans to his bank, which is Bank of England. So by removing Troy and removing other people, they really kind of got it down to who the brokers were. And then they looked at, okay, those that sent loans to Rocket, what was the cost of that? And then those that sent, amongst other lenders, I'm just using Rocket, could be Fairway and those other lenders. And then those that sent business to United Wholesale Mortgage, what was the cost of that? And what they found in this study was there was some disparity. They found that brokers that sent business to United Wholesale Mortgage, those consumers in the form of closing costs paid more than those that were sent to other outlets. So then the case and investigation started as into why would that happen?
They pulled that string and kept...
pull that string of what would happen. So let's talk a little bit about this. So at United Wholesale Mortgage, right, they have a very rah-rah and cheering environment that they want to be number one, right? They want to be the number one. And they got there. Kudos to them. Hats off. They want to be number one. Now, the question becomes is why would a broker send them business that maybe they could send to another channel if the rate wasn't cheaper. And, in some of our interviews with other brokers, oftentimes the rate was cheaper, but why were the costs higher? So some of this stuff just didn't add up and make sense. And inside this investigation, you start to see exactly what was taking place. And what we found out in this is that there was an instance in 2021 called
the All-In Initiative.
The All-In Initiative. You want to explain it? You want to talk a little bit about it as we kind of dissect this and go through it here?
Yeah, so they were rising steadily, normal growth, and then they shot through the roof. They were putting out Super Bowl ads. They were putting out tons of social media information, and they wanted the brokerages that were sending them business to increase that. So they put together this All-In Initiative that, when you dissect it, says, look, send us more business, stop using some of these other channels, and in turn, we're going to give you faster turn times and social media marketing and all these other benefits to you as broker A in your local market to incentivize you to send the business to us. And some of these, some of the studies that are revealed, a brokerage getting 20, 30, 40% of an individual broker's business would be very, very strong. 20% here, 40% here, 30% there, 10%. That's a nice balance.
So let's explain to our audience. So like if you were a broker and you gave 20% to lender wholesale channel A, United was getting 30, and then you gave another 50 amongst two other lenders. That's a healthy balance.
Absolutely. And that's also demonstrating that customer comes to me and they have a 680 credit score and they're going to apply for an FHA loan. I'm giving them multiple options of, here's this rate with these points, here's this rate without points. And I'm truly shopping, again, on the behalf of that consumer.
Right.
Well, that wasn't happening. Once they did the All-In Initiative, which in the mortgage industry has a completely different term, they wanted or encouraged and had contractual obligations to be sending 96, 98, 99% of their business to UWM, United Wholesale Mortgage. And so they're the report shows they're paying a higher cost, but in addition to that, they're sending 99% in a couple of the examples of all of their business, of $500 million worth of business to one channel. And it really raises red flags.
Yeah, and I think the All-In Initiative is, I think they called it the Ultimatum.
The Ultimatum.
The Ultimatum. Yes. And the Ultimatum was, hey, listen, if you are going to, and so our audience is crystal clear on this, it is clear as what we're about to say. If you're going to work with United Wholesale Mortgage, now this is in 2021, if you're going to work with United Wholesale Mortgage, you cannot work with Rocket and Fairway Independent. You cannot, or there's going to be consequences, right? And those consequences were in the form of a lawsuit. And so some people called it the Ultimatum because it was almost like a non-compete at that point. Now, United Wholesale's rebuttal to that is, well, we're not telling you can't shop. There's 70 other lenders you can work with. We just don't want you working with those two lenders. So then that poses the question, why? Why would that happen? Well, for our audience's standpoint, that if Rocket and United, clearly we talked about why they don't like each other, do you think they could have undercut each other in pricing if they knew a deal was in pipeline with one lender to get it over to them? Yeah, of course they were, right? So a lot of this could be credited to Matt Ishbia as hedging his deals and just protecting his business, right? He wasn't trying, he's just trying to protect the business in pipeline. And remember in 2021, what was happening to rates? They were plummeting, right? You lock today, next day they're half a point. So he's trying to protect his portfolio, his pipeline. I get that. But the Ultimatum ultimately led to what you were describing, where many brokers said, well, the two leading price leaders in the market are Rocket and United. So if a price leader is United, then I'm all in with them. Then I'm gonna do exactly that. And to the tune, when you look at this graph that Charlie will put in our YouTube channel again at What's Your One More with Number One, you'll see the number of loan officers from 2020, late 2020, that were sending 99% or more of their business to United was 3,831. By the end of 23, it was 8,682. Yeah. It more than doubled. Yeah. And that's a big number, man. And, I don't think there's a market in the United States that you can go to where if you were to look up the amount of loans being done in each county, each area, I'm willing to bet United's in the top three.
Oh, without question.
Without question.
And for me on the front lines as an originator, we compete against brokers, sure, day in and day out. And their pitch is, we're independent brokers, so we're going to shop. Mm-hmm. The whole marketing campaign they put out years ago of brokers are better because we independently shop. But then until they're not doing that, they're not actually advocating for the consumer. And so you have,
and when you say they, we're talking about this 8,623 that send 99% of the business. There are some brokers that are advocating shopping, right? We don't want to lump everyone into that.
They're not all
we know
the
who
same.
those guys are. Great people out there. But the ones that are hiding behind the independency and sending 99%, that's who you're talking about.
Oh, absolutely. Okay. And this article also talks about, there were some higher costs. So the consumer was getting maybe the same rate, but they were being charged discount points that, whether they were disclosed or not, they were unaware. And, we as originators must educate our buyer on what's going on. And part of it is I'm independent, I'm a broker, I'm shopping, and I'm presenting you the best option. Well, 99% of the time, it's always United Wholesale Mortgage is what raised red flags to warrant this investigation.
Right.
And now these brokers are countersuing United Wholesale Mortgage. And that's an ugly thing to be in. Lawsuits with the person that you send business to.
Right.
Is who loses.
Right. The consumer.
Absolutely.
It's always the consumer that loses. So, hey, we want to kind of show you some of the stuff. So, definitely going to point out one of the targets of this investigation, right? So I'm reading right from the investigation. We're going to point out this person in North Carolina, right, who happened to be statistically the #1 mortgage broker in all of North Carolina, right? So this individual does a ton of volume. Now, on their website, Charlie's going to cue up the video here, and he'll play it for us, but it's a whiteboard video, and you'll get to see it, right? And it'll play here in just a minute. Well, I think it's like 30 seconds. But in this video, this whiteboard is like every whiteboard video you've ever seen in your life, but it talks about why brokers are better, right? And ironically, it talks about the shopping for the best deal. So I'm going to let it play here for just a second, and we'll come right back.
Meet your local licensed mortgage broker. She's not a big corporation or a bank. She doesn't advertise on TV. She doesn't do car loans, trade stocks, or offer checking accounts. She does one thing, and she does it better than anyone else. She shops for great deals on mortgages. So why get a personal shopper for your mortgage? Because you want an advocate. And choices. Lots of choices. Choices set up competition between lenders, and that's good for you. The salespeople at banks and big lenders can't show you the big picture, but a broker compares deals from hundreds of banks and lenders of all sizes across the U.S., then organizes and presents those choices based on your location, financial situation, timeline, and other factors. She can then help you choose the best mortgage for your circumstances. And a better mortgage can save you time, frustration, and most importantly, $20, $50, or even $100 or more off your monthly payment. So when it comes to the biggest purchase of your life, don't take the first offer that comes along. Get an expert who shops on your behalf. Get an independent mortgage broker.
Okay, so you just saw the video there, Troy. You had something to say right before I played it. Go right ahead.
I like how it breaks it down. It's here's you, and here's the group that's going to shop your rate and your mortgage, et cetera, and it builds like this little pyramid thing, and all these different buckets and things are moving around really fast. But what's interesting is they dive deeper into 99%, and there's a graph. Yeah, it's a big pie graph.
It'll be in our YouTube channel.
And if you're not looking closely, you're going to miss the approximately $2 million of loan volume of like $500+ million of loan volume. Yeah, and I don't understand how they are contradicting themselves on the same website. Right.
So in that graph that Troy's referring to, this is not a mistake. This little pencil white line, that's the amount of volume that went somewhere else. But the bulk of this, $552 million, went to United. $2 million went elsewhere. That's an interesting number. Now, furthermore, I'm going to put a picture underneath that. Guys, this YouTube channel, we're loading it up, buddy. The picture I'm about to show that my producer's going to put in the background here, that same lady is standing right next to the owner of United Wholesale Mortgage at the New York Stock Exchange ringing the bell.
And they have a competition to be honored to go do that.
There's an incentive, right? So, you know who I don't see up there? I don't see the guy that sent $2 million up there. No. That's just, if I'm reading this article, I don't see a guy that sent $2 million up there. I see the mega players. So that's interesting to me. Now, so we're talking a little bit about this ultimatum, what's led to it, and quite frankly, the what it's done is now United has catapulted itself to the #1 wholesale channel lender in America. It's not even close. Rocket has taken a backseat. Fairway Independent, who was the other target of that, is no longer even doing loans in the wholesale channel. So there definitely was a squeeze that was put in there strategically. And, it was interesting to see to what the outcome of that was. So if I'm reading this article, right, and I'm a consumer and me just reading it in general, I get this feeling that some of the brokers that claim, not all again, but the ones that they really target in this investigation that claim to be independent are not so independent.
No, they should just put a UWM sign out front that says correspondent lender of United Wholesale Mortgage or something.
Which then poses the question, why aren't they disclosing they send all their volume to UW? I guess they don't have to, but as a customer, you would think that if you're independently shopping, I always wondered why, as brokers, they didn't show the 3 people they shopped with.
Right.
Show me who you're shopping with, right? You tell me you're shopping. As a broker, show me who you're shopping with. Now, I know some of my broker friends like, Q, come on, like really? But I mean, you have a pricing model. You have a pricing engine. You can just pull it up and show who you're shopping with right there. But in this case, I think that there's some people that didn't sign the ultimatum. And there's one in our backyard, by the way. And obviously, he can't come on the show right now because you're about to find out why he can't come on the show. But when all things are done, I'm going to get him on the show. But we have a guy who is he's in the investigation, right? They have him quoted. There's a whole section here. But, Scott Goldstein of Atlantic Trust Mortgage right here in Jacksonville has made national headlines because he's being sued for violations of the ultimatum that for the life of me, I can't understand. Because I've looked at this from his point of view, United's point of view, and it doesn't seem like he did anything wrong. But he's being sued for $355. These dudes aren't messing around. $355 million, or $355,000, excuse me, $355,000. They ain't messing around. I mean, that's not chump change. That's a lot of money.
Well, and there's lawsuits going back a handful of years in California and other states. And you look at it and you're battling your own allies, and both sides think they have a leg to stand on. But this all, no pun intended, originated when the ultimatum was put in place to vaunt this company to that #1 spot. And I think they were so fixated on getting to #1, they forgot the rules and taking care of customers, et cetera. It became broker and UWM are what is important, and nothing else matters.
Well, so it's interesting here. So I read this article and I go, okay, we talked about the methodology. They had the HMDA data, they had the deed and tax data, they overlapped the two, they extrapolated, certain things like, lenders that don't send business to the broker channel, as well as anything that was like apartment lending, commercial lending. They really got it down. Investment properties they removed because there's all kinds of nuances that can be calculated into that. And they looked at primary residences, second homes, and they looked at refinances and purchases, right? And here's what the results of this study, again, this is straight from the Hunterbrook case files. They said that on average, that $3.5 billion over a 4-year period is estimated to have been overcharged for those that sent loans to United Wholesale Mortgage versus those who did not. Now, that is a very, very big accusation, right?
Huge.
It's huge. Yeah. And clearly they have data sets to back it up. And all we're doing is reading straight from their data sets here. But that's that's a lot. That's a lot to be said, right?
Absolutely.
And you look at that and you got to expect that United Wholesale Mortgage's team would rebut to this, right? They would come back with some sort of response. They would say, no, that's complete wrong. Here's what's going on. But United Wholesale sent a cease and desist. That was their response. Yeah. Now, as this investigation came live, now remember, folks, this only came out a week ago, a week from Wednesday ago, it came out. And it literally was like a grenade when it hit the industry. It was like, it's all Thursday morning. Everybody's like, scuttlebug, what's going on?
Title friends, real estate friends.
And I mean, it's just now making its waves out a little bit here. But, the interesting thing was when I take a look at this, it was Ishbia's response and United Wholesale's response post-article now. Now United is starting to make some claims that I think are worth discussing, right? The first claim United is making is that, hey, listen, the group that wrote this, the media group that wrote this, they're actually protecting a hedge fund called the Hunterbrook hedge fund, right? And so what they're stating is that, listen, the whole reason this article is a botch job, that's what United's claiming. It's a botch job. It's complete BS, is because this company is longing the stock of Rocket Mortgage and shorting the stock of United Wholesale Mortgage. That was claim number one. That's a botch job. The hedge fund is doing this, and this is a 100% statistical move for a hedge fund that's notorious for manipulating stock prices and garnering a return. Okay, so maybe that's right. Maybe that is the case, right? I look at the stocks; both appear to be somewhat level since this came out, right?
Yeah.
So really not too much of there, but it's the long play, short play. We'll see what happens. The second thing they came out with was they said, Dan Gilbert is behind this entire article.
Yes.
He is the mastermind infiltrator, the guy that has started this whole thing. But if you read this article, they don't talk too highly of him either. Like they don't talk too highly of him. I mean, they actually talk about his vindictiveness and how I guess you could say petty. Yeah,
absolutely.
Petty.
Yeah.
I mean, so like even to the point to where when LeBron left and took his talents from, as we all know, from Cleveland to Miami, the pettiness went as far as to an email that he wrote LeBron and a particular script, as well as changing all the price points of LeBron's fatheads to the year which Benedict Arnold portrayed his country. Yes. So like that's the vindictiveness they get into, here, right? But that was that's the second claim. Now, the third and most recent claim that we've heard come out of the UWM camp now as a rebuttal is that, hey, one of the authors, one of the investigators of this, they were recently an independent mortgage broker, and they happened to send all their business to Quicken. No wonder they're doing this, or to Rocket. Well, that's correct. And actually, they disclose that in this 18 pages. Like, it's actually disclosed in here that one of the guys that did this for us refused to sign the ultimatum.
Right.
He refused to sign it. And so, therefore, he had no choice but to send his elsewhere. And one of those elsewheres happened to be Rocket. It wasn't 99% of his business, but it was to Rocket. They fully disclosed that in here. Yep. So I don't think that's too much of a bombshell response. But those have been United's response thus far. And man, hey, if I'm United, I'm pissed off this is written too.
Oh, without question.
Because this isn't written in the best light.
Well, no, and it's also, I mean, I think they quoted in there, but this is playing out like The Big Short. You're shorting funds, you're doing this, you got brokers, making a ton of money and sending product here. And if you look at Gilbert and you look at Ishbia, the consumer is getting caught in the crossfire here.
Yep.
And if a lawsuit is proposed, a class action or anything like that, they try to get some groundswell, you potentially could have individuals suing a mortgage company that they never knew they were paired with because they went through a quote independent mortgage broker. Mm-hmm. And that doesn't bode well for anyone. But at the end of the day, the consumer is what matters most. Mm-hmm. And when you're putting that information out there between ads and social media, et cetera, and then you're having the ultimatum, and then you see people 98, 99% of the business going in one direction, you're kind of lying to the consumer.
Well, so I think this is where the lying, maybe deceptive might be the word, right?
That's probably a better word.
Management by deception, the old adage. I think this is where the article really, and I guess you could say the investigation really takes a turn to make you scratch your head. So we all remember the Super Bowl ad. Well, I say we all, but anybody who's in the mortgage business, this is the first time you had ever seen a mortgage broker ad ever, especially at the Super Bowl. This is like $5 million worth of ad right here. And it basically says in the ad, and Charlie's going to play it here in just a second so you can see it, but this is a Super Bowl ad that ran in 2021 right on the heels of the ultimatum, right? So Charlie's going to cue this up, play it. It's about a 50-second ad. We'll let it run, and then we'll come right back.
Playing with rockets is great when you're a kid. But when it's time to get a mortgage, you quickly realize that a rocket is complicated and expensive. It's best to work with an independent mortgage broker instead. They're dedicated to getting you a home loan faster and more affordably. And they're more than just mortgage experts. They live right in your own neighborhood, so you don't have to go it alone. For mortgages that are faster, easier, and more affordable, find a local independent mortgage broker near you.
So what was interesting is the website that they promote. Now, it's powered by UWM. They don't hide that at all. That's in the ad, right? Powered by. Now, what's interesting is when you go to that site and you type in your zip code, the people that pop up aren't necessarily the people that are sending business to Rocket Mortgage. No, they're not.
They're sending business.
They're sending business to United Wholesale. Now, the people that send it to Rocket, they may be on there, but they may not be on page 1, and they may not be on page 2. They're eventually going to make their way into the camp of 3 or 4, depending on how many brokers are in the area. But that's a strategy.
Oh, big time.
That's a strategy, right? And maybe that's part of a reward system for being a loyalist to this brand, as the article indicates. That's the article's opinion, is that there was a loyalty brand for doing this. So let's go back to that lady in North Carolina. When we put that zip code in there, who do you think pops up in the top 2 spots?
She's up there.
The lady that was at the New York Stock Exchange, right? She's in the top 2 spots as a premier person of doing that. That is by design. That is by design, according to this article, that is the way that's being done. There's countless evidence in this article that they use to talk about moments like that UWM has done to create this loyalist brand, right? Now, I want to back up. If the broker worked directly for UWM and only UWM, and you were having Super Bowl ads, and you were having websites, and you're having whiteboard videos, and all that's provided by UWM, is that a problem?
Not at all.
Not at all, because you work for UWM. But when you claim to be independent, and that independency, based on what I'm reading here, doesn't feel independent as a consumer, that's where this investigation really starts to sink its teeth into what's really going on. And so there's a lot of things they state in here. We don't have time to cover all of them. We really don't. We'd be here for 18 episodes.
Yes.
But what we'd like to do is this. We wanted to kind of uncover the main points on here. And then we wanted to kind of display why the ultimatum may have happened was to squeeze someone you don't like. Yes. That's what that was. While protecting your fund was the byproduct of, I'm protecting my fund, but I'm going to be able to squeeze someone I don't like, right? And in the meantime, I'm going to create a large brand of loyalists over here and quote unquote, give them incentives for continuing to send business to us, right? And so as we kind of wrap this up, we do want to let you know we are working diligently to get the gentleman here in Jacksonville that is currently on the other side of the ultimatum on the podcast, and we have to wait our time for legal reasons to get him on here. We also are working on bringing other brokers who are currently part of the ultimatum on this show to hear their point of view, because I think that's important. And I think that, what we want to kind of just display here is that from the consumer standpoint, when you work with someone, you really need to understand those channels we discussed. None are bad. I think it's important. Big bank, not bad.
Not at all.
Retail lender, not bad. Mortgage broker, not bad. But you want to make sure that you ask everyone, where's my loan going? Where's my loan going?
And early in the process.
Absolutely. Disclose it. And I think that's important. And what you'll find is that you're going to get some answers. Some of them may take longer than others, but you should absolutely be able to get those answers and understand to yourself, based on this article, could I be paying more because I'm going to a certain lender?
Right.
And I think that that's really important here. This is the consumer advocacy wake-up call here, right? And I think that what you're finding here is that some people in this author realm feel like these guys have gone unchecked.
Oh, they have. And one of the things when UWM responds to this article, as they have, is the data is the data. You're pulling information from local municipalities. Mm-hmm. You're pulling data from HMDA information. You're scrubbing it. They did this in a very scientific way, and it produces these results.
Yeah.
So I don't care who's asking the question. If the answers are factual, then they're factual.
Yeah, the methodology is something that's pretty hard to argue with.
Without question.
I mean, they're pulling public data, and then they're pulling government data, and they're overlapping the two.
And 3.6 or 3.5, whatever billions of dollars, they're putting out there to try to draw a correlation that maybe if you were shopped multiple times, mm-hmm. you could have gotten a better deal, lower points, better rate, mm-hmm. what have you. And that is what truly an independent broker is.
Right.
And then it's all fair. And it's all, and then we're living in an open, society of competition, et cetera. Yeah. And I think what UWM has done has really muddied the waters in an industry that, really did a lot of cleaning up from the early 2000s to present.
There's no doubt this gives the industry a black eye. There's no doubt this is a punch in the face for the industry, because no matter if you're banker, broker, or retail, you're all lumped into this together, right? You're all bad mortgage guys at this. And dude, I can feel the YouTube comments just piling on right now, because I know so many people love UWM that work with them, right? And I get it. I feel the same way. I'm not hating on you. I'm just saying I'm reading a case. I'm reading an investigation that took place about a company that you love. And I've spoke to a couple of people about it already, and you can feel the pull here. Like, there's some people that are like, man, that's BS. That's this. It's that. They've always been the best price for me. I would only shop, and I'm like, well, things that you don't know that kind of open your eyes is like, well, do you own the brokers? Oh no, I work for someone. Well, did they have different margins? I mean, there's all kinds of things that could have made that pricing look different and better. it's just crazy. But I'll say this. Inside this, we talk about the person here in Jacksonville. Again, I'm going to tell you how bad I feel for this person that's being sued for this, because most people don't have. Hell, who has $355,000 laying around? I mean, this, we're talking about a guy that I know, a father, family man. I mean, listen, he's quoted in this article saying, hey, listen, and he was quoted because he gave this to the National Real Estate Post. He said, hey, listen, we're a small company. We've got families. We've got people that we need to provide employment for. And they're, being UWM, trying to take that away from us. And he said it should be the consumer first, and it's not. It seems it's UWM first. In the ultimatum, man, that's pretty accurate, right?
And some of the quotes and some of the videos and the voicemails and it screams of 80s Wall Street kind of, we're the biggest, we're the baddest, you can't touch us, and well to the little guy, and there's a lot of ego there.
Well, our industry, sales in general, provide that, right? I don't blame you got a guy, right. But I mean, you think about it. I mean, you got a guy that played on a national championship team with Tom Izzo. I mean, fired up, dude. Good for him. I'm not mad at him. But I will tell you this. I'm going to put this on our YouTube channel, because I'm not going to play it on the show, because I know sometimes we have some people that, listen to this with their kids in the car. They tell me that all the time. So I'm saving this for a private, get on the YouTube. But here's a voicemail from the owner of United Wholesale Mortgage to the guy that's running his retail division called U Mortgage, right? It's left for a gentleman by the name of Anthony Casa. So Matt, this is when Matt found out at 4 a.m. in the morning that they overtook Rocket as the number one lender. And I'm just going to let you guys listen to this one. I'm not going to get into what it says, but this couldn't be more like...
It's locker room.
It's locker room material only. Let's put it that way. And it just shows you the spite between these two. And it shows you the hatred and how long he's wanted to get to that point. And he was so excited for him, he had to share that with Anthony Casa. Now, what's funny about Anthony Casa? Well, Anthony Casa used to be the president of AIM, which would be to mortgage brokers as what NAR once was, right? It was the independent mortgage, as the American Independent Mortgage, basically association, if you may. Well, he used to be the president of that, and Casa is no longer the president of that, because during COVID one night he got some liquid courage. And you can see this online anywhere. And he's sitting outside of what appears to be a bar in South Florida. And he goes on a rant against Quicken or Rocket Home Mortgage executives to the tune of telling them Matt Ishbia slept with one of your wives. Literally, that's what he says on there, but he doesn't say it that politely. And it goes viral. And there's all these kind of videos you can watch of other mortgage executives watching this, some of them spitting their coffee on their monitor as it comes out. But 2 days later, he resigns, right? He just happens to be the head of their U Mortgage division now. And that's who this voicemail is for. So I paint that picture because, as Troy said, it's a very locker room environment, very fired up. And, maybe that's your thing, right? And in the world we live in today, I don't think some of this stuff's probably condoned in the work environment right now in this world. So, or really any world where you see some of the stuff that's said. But anyhow, that being said, so we're going to do more, and we're going to recap more on this series, right? We're going to talk more. We're going to come back to it, because this is going to continue to unfold. It's only out for a week. But we wanted to bring it to our audience because I want you guys to get into this. I want you to get a chance to read all 18 pages. We're going to post all this in our YouTube channel, What's Your One More. I know the feedback's going to come in harsh from some areas. I know there's going to be some loyalists that are not going to be happy that the way the angle in which we're talking about this. But guys, it's not our angle. It's not our opinion. This is coming straight from the Hunterbrook case files. So my goal is to get one of the authors of the Hunterbrook case on here, talk a deeper dive on this, right? But we are going to bring brokers. We want to bring both sides of the table to this to talk about it. I don't want this to be a one-sided conversation. But, Troy, I want to thank you for your time today.
Pleasure.
Thanks for stepping in here and helping me kind of break this down. And I know the two of us read this multiple times. And here's the thing. We were living through this. Like, we saw this unfolding, right? Not maybe at the level in which they dove in, but we recognized some things were taking place.
None of it was a shock.
Yeah, none of it was a shock. If anything, most of it was like, wow, that's how they proved that, right? So, it's interesting. So more to come from this. Guys, if you like what you're hearing, our podcast is on every platform you listen to a podcast on. You've heard me mention YouTube multiple times, but I'll do it one more time at What's Your One More with number one. Please subscribe, smash up the like button. We love the comments, even if they're not favorable, still love them. We respond to them. We'll try to get back to you on everything, and we'll be back with more episodes on this. But till the next episode, we'll see you guys at What's Your One More. Thanks, Troy.
Good deal. Thank you.
I got one more shot, I'm gonna make it. One more chance, I'm gonna take it. I meant it when I said it, now it's time for me to do it. I got one life to live, so I put my all into